Good evening. Welcome back to Be Rich. Today I have my nephew Shashwat Swaminathan with me, and we are here to discuss one of his favorite companies. The company I'm talking about is Google, what is known in the listed market as Alphabet, because Alphabet is the holding company. It has two classes of shares, Class A, Class B. The differences between Class A and Class B in actual value is very less in this case. This company was founded in the late 90s by Larry Page and Sergey Brin. Both of them were Stanford PhD ones. As part of their dissertation for PhD, they wrote a search algorithm which they decided to start a company. In 1999, they offered to sell this company to Alta Vista for $1 million because they wanted to go back to Stanford and continue their studies. Lucky for the world of computing, they chose not to. In early 2000, Yahoo had a chance to buy this company for $1 billion. Yahoo kept dithering, and by the time Yahoo could make up the mind, the value of Google went up to $3 billion. Luckily for us, they decided to continue, and today it is one of the biggest giants. This company has done a lot of great things. One, they made search very easy, and if I remember right, they made the neatest mail, and everybody used to wait for a Gmail, and it used to only be by invitation. And I remember waiting for my invitation to come. Today, you can open Gmail when you choose to. It was not like that. Then they use the free cash flow they generated from search into other materials. They bought maps. They converted into Google Maps. It's one of the successful buyouts they did, and it generates billions of dollars for them. Then they did the Google Drive, Google Photos, and then second most successful of their acquisitions is through which you are watching this program called YouTube. They bought YouTube for less than $1.5 billion from their founders. Today, every month, YouTube makes $1.5 billion for Google, and Google is the company which started vlogging. They also got a very good model where they started sharing revenue with content creators. They were very democratic, so all the content creators came onto YouTube and made YouTube the monster it is today. Whether it's Facebook or whether it is TikTok, they all played catch up. When TikTok has gained prominence, YouTube realized that there is a short of attention span, and they introduced what is called as shorts, which has also become widely successful. There are two different distinct divisions in Google as a company. One is what they call services, which includes maps, YouTube's search algorithm, and a whole of other things. And then they have cloud acquisitions and moonshots. Cloud acquisition and moonshots guzzle a lot of money and burn cash. It is services which generates the money. Google as a company is always in looking out to buy more stocks of companies and acquire them outright. There have been spectacular failures, like the failure of the Google Glass. There are more failures which I may not know about, but this is moonshot bets, and lot of times Google has failed miserably. So this is an overview of the company, and I have with me my good friend and nephew Shashwat to discuss Google.
So, coming to Google as a company where you can invest, they pride themselves in having two different avenues of their, which you mentioned, which was services and cloud. So, if you can describe basically what they're trying to do with their cloud computing, and then what they're doing currently with their services aspect.
The services is what is basically a search algorithm. Everybody searches Google. Microsoft came later with Bing and is still playing catch up. They tried to sign up with Yahoo, and then Yahoo broke free of Binge. Binge has about less than 5% market share. Google has a 95% market share in this. So basically, when you search for something, you just Google, and they charge you some money for coming up in this search engine. And so they made what is called as Google AdWords. So when you advertise for a services business, if you can go through Google, you will generate a lot of inquiry. So Google AdWords is a course by itself. How you can word it, how you pay per search. Normally, what happens in advertisement, like I advertise in a newspaper like Hindu, which we receive in Madras, I pay a huge amount upfront, and there is no guarantee of return. In case of Google, one, you do use AdWords. The other thing is you can place the ad where you want when you want, and you pay per view. So every time you pay something, somebody has actually seen your advertisement. So it brings more value for money. So and therefore Google has sucked out completely whatever was the advertising revenue of newspapers has transferred to Google largely, and to a small extent other social media. Suppose somebody wants to buy a car or sell a car or something. When I was a kid, it used to be full of in Hindu newspaper. Today you have websites which are powered by Google, which is basically you have matrimonial sites and you have sites selling and buying cars. Now these are all plates which are there on the table from which you eat. But the table is Google because Google is the search engine.
Yeah.
And Google has a huge Android, which I didn't talk about. 99% of the world's users use Google, but the Apple is so expensive. Less than 1% of the population uses Apple. It's 15% of the smartphone market, and Android is 85% of the market. Android is free because Android gives you a lot of advertisements. So with Android, Chrome, and search, they make a killer earnings. And then what Google has successfully done is they use money to acquire companies. They acquired Maps and they made it what it is. And Apple has not, I can't use Apple as effectively as I would in India. So if I want to go from here to your hometown of Kumbakonam and then to your village, I can use Google. Now there was a company called TTK Maps. So before that, when I used to travel on a South India tour with your grandfather, so we used to have maps which will put on the
The
bonnet, paper map, and see which road we are following.
Yeah.
Now you have Google, which gives you all sorts of routes. Now it's free for you and me. That's the USP of Google.
Yeah.
It gives it free for 95% of the. It's called freemium. They give it free for 95%. But whenever Uber wants to use Google Maps, it's pay per use.
Yeah.
And it is any delivery. Swiggy and Zomato burn investor money fighting each other. But Google is not bothered. Every time you order a Swiggy, Swiggy is paying Google $7. If that is the minimum charge is $7, it keeps contracting as you go down. 7 rupees every time I use a Google Map. Imagine. So maybe in case of Swiggy, it's $1 or 50 paisa. But every time somebody uses Swiggy Map, they pay 50 paisa. So imagine the kind of cash flow he's going to get. He's getting it in search, in Chrome, and then in what I call Android, and then Gmail. If you remember, if your air tickets come in Gmail, Google knows that you are flying somewhere and they sell you ads.
Yeah.
It tells you arrival, flight arrived, flight gone. So it immediately adjusts you and gives you the ads. This is really hyper local. It's a global company which has gone hyper local. I'm not talking much about YouTube, which you and me, if I am a star today, it is because of Google. So this is the enormous power of Google services, which I can explain in very shortly.
And coming to the focusing on one of the points you talked about in your summary about Google using its revenue from services, that is basically free cash flow, to invest into moonshots, which you called it. So, one, could you explain what moonshots are? And second, could you explain the similar? Because I see a sort of similarity between what Berkshire Hathaway does as capital allocators and what Google is doing.
Yes.
If you can talk about a similarity difference type thing there.
See, one thing I don't like, Buffett says we don't understand the business. But now I'm getting a grips on it because I'm doing YouTube myself. This is huge. So they are generating huge amounts of free cash flow. I have to deploy. They don't
And
give dividend.
what is free cash flow?
Free cash flow is money which you don't need, which you just park in the bank.
Okay.
So they are generating huge free cash flow, and that cash flow is not being given out to normally Microsoft and Apple pay out huge dividends. These guys don't pay dividends. Like Berkshire, Warren doesn't pay dividend. So they keep the money with them and they keep buying companies. They bought Maps. It was a no-brainer. Nobody knew. Apple couldn't buy it. Apple created itself. Microsoft didn't buy it. They got the first mover advantage. Apple wanted you to pay for its operating system. Microsoft wanted you to pay for Windows. They gave Android free. So the freemium model was an extraordinary guess. Nobody knew Maps would pay off. Nobody knew YouTube would pay off. There have been spectacular failures like glasses, and there'll be many.
And the Google car.
But still they are working on the car.
Yeah.
But not winding. I had just taken 2 bets which have paid off, and they are huge. So the more and more cash they are generating, I read somewhere they are talking about cancer research and what they have a artificial intelligence called DeepMind, I think.
Yeah.
So we are talking something like a huge thing. We are getting a slice of a huge cake, and the company just throws cash for generates free cash, and it's so cheap compared to some Indian. Like if I have to buy Natco Pharma at 60 times earnings, or if I'm buying Hindustan Unilever at 60 times earning, this company is dead cheap.
And just to draw a comparison between an internet firm in India, InfoEdge, which owns
Yeah,
Naukri.com, and
but see, these are all very small
individual
bits.
websites. Yeah.
These are individual websites. Here you are talking about controlling the entire system.
Yeah.
Yeah.
So coming to that point, you talked about the freemium model and how Google basically did a trailblazing move where they liberalized software for all. So coming to that, how do you think Google has been able to provide the software which they've spent R&D on and provided it for cheap? And how have they been able to convert this into a monetary advantage for the company?
See, they started with their search engine, and only two of them started with it, and they found Eric Schmidt as a CEO. The cash flow, generated was far higher than the money they've spent, and they had a pool of engineers who worked on more and more products, and the cash they had was generating was far more than what they would spend on a pool of engineers. So the free cash they got, they invested in engineering talent, computer programming talent to program more and more and better and better. That's what they've done.
And so
And wherever they could not program it themselves, they went and bought that company and deployed more engineers to turn it around and make it a better product. YouTube originally was not a great product, and then they invested a lot of money in it. Maps was only rudimentary. They got the idea, they found that idea good, they found the kernel of truth, and they then worked on it to make it as successful as it is today.
right. And coming to globalization being a trend now, with a country like with multiple countries coming up now, with India and Pakistan and multiple of these countries, what Google makes 53% of its revenue outside its borders, which is outside USA. So, how do you think this increasingly globalized world plays into
Yeah,
Google's
because
plan?
Google is completely a de-risk model. A day will come where every human in this planet will be using Google. America has only 350 million people. So I think as it goes along, Google will have less than 20% of the earnings from America.
And coming to the ethical concerns which people have with Google, because some people say that Google is harvesting big data to feed into advertisers.
See, this is what I'm saying. You are signing, I don't use Android.
Yeah.
You don't use Android because we don't want to share the data. It's a choice that the individual makes. You want to, that's the whole thing in the freemium model.
Yeah.
There's nothing free, there's no free lunch.
Yeah.
You are selling yourself, you are the product.
Yeah.
Well, the choice is yours whether you want to be the product or you don't want to be the product. Here I am the product. So I'm giving knowledge. The advertisement money comes, we are able to pay staff because we don't want to retain the money, and then you continue to grow. So one has become two, two became three, three became four. That's exactly what it is. The choice is
And
yours.
And coming to keeping these technology companies, not even Google, Facebook as well, keeping them in check, do
Hmm.
you think a good enough job is being done, or do you think there needs to be more sort of regulations which.
I don't know. I think more regulations are required, but Google has been very clever to go. Google has not got the negative pages that Facebook has got or Microsoft got because the promoters were very clear and they were very smart. In Microsoft, Bill was the hate target. Here it is Mark Zuckerberg who's the hate target.
Yeah.
So here what they did is very early in life they got themselves out. Neither Page or Sergey Brin is directly involved in running the company. It was Eric Schmidt and now it is Sundar Pichai.
Yeah.
So they have made it professional. They have separated themselves from the company. Though through Class A shares they control most of the company. They are having the cake and eating it too.
And for the clarification of the viewers, what is the difference between Class A and Class B shares?
Class A has more voting rights than Class B.
And let's say watching this video, some of them would want to go and buy Google stock. Which do you think they should?
So they have two classes, Class A or Class C. You might have buy Class A shares. This is what I think. Dividends don't come anywhere. The choice is yours, and Google is going to grow. Whenever there's fear of regulation, it will drop further. You can buy more. But I think Google is in a best place to be.
And with multiple of these tech stocks in USA being valued at 50 or 60 times P, why do you think Google has been underestimated by the market?
I do not know. I don't have an answer. There are some things which don't. Maybe Google is not sexy, and there is a fear of regulation coming on Google. And Sundar Pichai playing low key. For the record, the company makes 112 EPS is 112, I think. $112 per share, and the share is trading at 23 times earnings. You must go ahead and look at buying Google. Thank you for watching, Be Rich. If you like this video, please share it with your friends and relatives. It's not enough to share. Press the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you won't be notified every time we come up with a video. Once again, I thank you for supporting Be Rich. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.